first question I ask is, how much capital have you raised in the last 6 months? And the answer I always get, well, we haven't been able to find a deal, or we haven't been able to get anything under contract, or this or that. But everybody wants to give you a tip or a trick or a skill. What you have to have is grit, persistence, discipline, and authenticity and honesty.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else. With your hosts, John Cohen and Chris Grinzik.
What's going on, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grinzik. With me, as always, is John Cohen. How you doing, bud?
I am good. Brief little prequel to this. We got some insight. I think the guest is going to be amazing today. I think we're going to get some no frills, no BS, some real shit. I'll steal words out of his mouth, not mentioning names, but there's some people doing some fucked up shit, and I think it's going to be fun to shed some light on that. So I think it's going to be a good one.
Well, you're pumped. I'm pumped. I hope he's pumped. We're happy to have him on. We're going to jump right into it. So with that being said, Logan, thanks for coming on, bud.
Guys, thanks for having me. I'm super stoked. I do a lot of these podcasts, and I've been looking forward to this one.
Absolutely. We're happy to have you. So for anybody who doesn't know you, doesn't follow you, can you take a few minutes, fill anybody listening in, your background, your journey, what you do, stuff like that?
Absolutely. So grew up in a small town right in the Midwest of Missouri. So Jefferson City, which is the capital of Missouri. Not a lot of folks know that. Grew up, man, as I grew up, I saw my mom really kind of take our family and put her obligations on her own back. And so when I was 14 years old, I was big enough, old enough to go make some money. Man, I started to grab these jobs that I could. So had to get a school letter from my school to say that my grades were fine. I started baling hay, washing dishes and sweeping floors when I was 14 years old. When I was 15, over to my mom and say, "Hey, Mom, I got a couple $1,000. How much do I need to open up a Roth IRA?" Right? I was following Dave Ramsey with my personal finance class at high school, and she's like, "Well, I think you have enough." So we went and opened up a Roth IRA, and I've had a Roth IRA since I was 15 years old, and just really valued I think what my mom taught me was really to value the money that you make, and the dollar that you earn is you need to respect it. And so that was really interesting for me. I took that same work ethic, applied it to athletics. And so in high school, I played basketball, I played football, and then college, I actually got a scholarship at the University of Central Missouri, which is a Division II school near Kansas City. And, I had, again, this opportunity to apply this work ethic because I got a scholarship. I felt, responsible for those dollars that they were giving me to play football. Not only that, to be a good student as well. And I became the captain of the team. And after my senior season, I was picked up as an undrafted free agent with the Oakland Raiders. And so when I went out to Oakland, I had this big old head, right? No, figuratively, but also literally. I had this massive head. They had to make like an actual new helmet for me. My head was massive. It was a basketball. But, what I didn't take into consideration when I got to that next level, I had been so good in college because I was able to outwork people and then physically out-dominate them. When I got to the NFL, I was 300 at the combine. I was 335 pounds. I bench pressed 225. I think it was 29 times. I ran a 5 flat 40. So physically I was there. But when I got there, I started seeing the speed of the game and these humongous men flying around the field. I was not prepared. And I just had this, I unfortunately had this ego that really was the demise of me playing in NFL football. I'm a high probability in my own mind that if I had the same mentality that I do now when I was playing, I'd still be playing football. But I think there was a different plan for me. So when I got cut from the NFL, I went back to finish my master's program. I lost 120 pounds. I took a job making 265 cold calls a day. I'd go to school for 4 hours in the evening. And that just really showed me the discipline and focus. And if you make certain choices, you can really impact your life physically and mentally. Well, I went through this, I had identified as an athlete this whole time, right? And so when I got cut, I had to, kind of figure out who I was as a person. Well, throughout this whole period of time, like I mentioned, my mom had been a real rock for me growing up. Well, my dad actually lost his battle with drugs and alcohol and passed away in less than 2 weeks. And so I got cut from the NFL, no longer an athlete, lost 120 pounds, trying to figure out who I was. Then I lost my dad in a matter of 6 months. So it was just this massive life change that kind of, I think, set me on the trajectory that I am today, that set a good foundation to kind of build a business. And that's kind of my background. And then I started to get into real estate here in Kansas City.
Yeah, I love it. I think that's an incredible journey. I think it's super powerful. Super impressed you opened up a Roth at 15. I still don't have one, so kudos to you.
I've been saying I'm going to do it for about 10 years now, and I'm 33, and I haven't got close.
Yes, all right. So I still got another 5 years to go. I'm good. As long as I beat you, John, I'm good.
There you go.
No, I think that's awesome. I think it's an incredible story. I think there's tons of lessons. I do want to continue a little bit along your journey. You're cold calling, you're doing, going to your master's. When did you start and get involved in real estate, and what was the entry point for you?
Yeah. So when I moved to Kansas City, I had a, decision to either be a renter or, to own a house. And so I opted to take some money that I had saved away and buy my first house. I bought a district here in Kansas City 7 years ago when you could still find, undervalued assets, not really, an option anymore. But I bought that house with a mentor kind of guiding me to say, look, this is what you need to do to this house. So I put a renter in there. I was a general contractor on that house. And in 2 years, I flipped that house, moved out, and made more money than my salary was that year. And that just kind of was a light bulb moment for me. And while I was finishing my master's program, I had to drive an hour to that job. And when I would drive, I'd listen to audiobooks, podcasts, anything I could get my hands on. And that's when I started getting into the rich dad, poor dad stuff and started to realize that real estate was something I wanted to be kind of invested in. So I did that a few times on the single family side of things. I took a few different jobs, but 3 years ago is really when my big foray into real estate happened. I got called into my cushy 6-figure sales director job here in Kansas City. I was just married. My wife had just taken a brand new job too. So I was pretty comfortable. And they called me in at 6 a.m. in the morning and said, you're fired, and they gave me I knew I was getting fired. So I brought my own cardboard box and I called my wife. I told her, and she said, hey, look, I understand what happened, but check your email whenever you get home. So I did. I checked my email, and she had already started the articles of organization for my LLC, which is now LiveFree Investments. And she said, go follow your passion. Well, I wasn't sold on real estate 100% at that time. And so I took a position of a head of acquisitions for a $50 million fund here in Kansas City, but I also started my own sales consulting firm. And so I grabbed Inc.'s 5,000's fastest growing companies. I called the first 1,000, and I landed 3 full-time sales consulting clients. They said, hey, well, what do you do? I said, well, what do you need? And so I was building CRM systems. I was flying around the country, going to their own conferences, pitching their products, training their sales. 6 months in, down in that road, my wife took me on a walk and she said, I'm very impressed with what you've been able to accomplish. I had done probably 60 transactions in 6 months. So, and these were all single family homes and smaller multifamily homes, but I also had this sales consulting kind of gig. She goes, you need to focus. And so I dissolved that, consulting firm. Took me 2 or 3 months. And when I did, I started to realize that I didn't want to be in single family, the single family world. So I started to buy commercial and multifamily properties myself. And when I did that, I ran out of money pretty quick. So I was like, there's got to be a better way. And then, lo and behold, I run into Russ Gray, Robert Helms, Michael Blanc, all of these guys. And then the education circuit just kind of started. So I started flying around the country, going to their conferences, reading their books. And I said, well, I could do that here in Kansas City. And so that's how I started kind of getting into the multifamily and commercial world in Kansas City about 3 years ago.
Nice. That was, it's actually a market that I haven't spent much time in. I have a couple friends that have looked there a couple times, and they've just, I don't know if it's for whatever reason, but I think, we talk about it all the time, Chris and myself. If you're able to invest in your backyard, it's the best thing in the world because you don't have to get on a plane. You don't have to, it's your backyard, right? You see things that people don't, and things that people don't. So I think that's, important. There's been a huge trend. I'm going to steal the words out of Chris's mouth. It's like the in thing, right? To buy out of state.
Right.
And we both live in New York. A little bit difficult for us, but people don't talk about investing in their backyard. They like to go the other routes. I think it's awesome that you basically did, like you said, you got involved, you educated yourself, and you said, fuck it, I can do this here, which most people look for any objection in the world to say, well, I can't do it in my backyard. I'm going to go buy in Oakland,
right.
Wherever. So I can tip my cap to you there, because people ask me all the time, where should I start? And I always say, look out your window, right? Why can't you do it in your backyard? Not, don't give me an excuse, right? But, give it a shot. So, awesome work there.
Yeah, absolutely. And so, I mean, the idea that I had was, I had built this big single family, home buyer list. So I was like, oh, I'll go put a big commercial property under contract and I'll raise all the capital I need from those guys. And wow, was that a wrong assumption? So, and get this, the first two kind of what I'll call, joint venture deals that I did were on kind of commercial mixed use assets. One was a 12,000 square foot building in the heart of the Crossroads. The other was over in the 39th Street district, and it was a bagel shop, and it had 2 Airbnbs on top of it. But the real first syndication I kind of ever put together, get this, was on a bed and breakfast hotel. And during my due diligence period of the bed and breakfast hotel, I found another one and put it under contract too. So here's a guy who's never raised capital, doesn't have any hotel and restaurant experience, has 2 kind of properties under contract and about $2.5 million to go raise. And I had 60 days. So I just had to figure it out. And I learned real quick that unfortunately those single family home investors had no interest in going into commercial, and then especially, a bed and breakfast hotel. But that was my first kind of foray into the syndication business.
Yeah.
So what did you do to either convert them and or start from scratch? Because I think people always ask us all the time, how do you find investors, or what do you do? And I say, listen, you got to start today for tomorrow. And at least you had a list, but what were the steps that you took to either convert them or find new investors?
Yeah. I mean, took my sales kind of, background and thought, okay, well, if I'm reaching out to folks, what are their objectives going to be, right? So I started thinking about the objections that I was going to get. First, I went and negotiated an extension because I knew I needed it. So that was one thing. Put my own money hard and just believed in myself. But I went and I thought through the objections that these investors might have. And 1, it's like, Logan, you have no experience. 2, you have no experience operating. And 3, you have no balance sheet. How are you going to do these deals? So for each one of those kind of objections, I went and solved for them, right? So at the same time, I was moving my license over to commercial and multifamily brokerage. And the owners of that company really took a liking to me. And so I said, hey, guys, I've got some projects that I think that we would be a good partner for. I'll give you guys a big portion of the general partnership if I can use your balance sheet and your operational experiences. And, thankfully, I think this was not a coincidence, but thankfully they had just been hiring a COO at the time that was from Ritz-Carlton. And so it just was this perfect mix of, okay, I've got the balance sheet, I've got the operational side, and now it's time for me to try to go out and find investors. And so what I did, I had already built a pretty good following on BiggerPockets. And so I started just hammering BiggerPockets. I mean, everything about Kansas City, I was on the forums, I was connecting with people, and I was having phone calls, and I was reading books at the same time, right? So I was reading books on how to structure deals, how to raise capital, all of these different things. And through my, I think just my work ethic, I was able to get enough capital to continue to get those deals done. But I mean, it was a grind, right? I mean, I had to have probably 150 calls with potential investors that were either interested in single family homes or just Kansas City in general, and get them kind of over the hump to invest in Logan, but also in these bed and breakfast hotels. So it took me about 45 days, but I got that $2.5 million raised, and we closed on those transactions. But I think it was just a blunt force. I didn't do any but that for 45 days, right? That was my sole focus, and had to do that 100%. So I learned a lot during that period.
That's awesome. Do you think it was investing in Logan or investing in the deal that sold people, or your expertise on Kansas City and the team you put together?
100%. It was just investing in Logan. It was investing in Logan. None of these investors had really ever even invested in a syndication before. So I basically took them from, hey, I have money. I'm in California. I'm an accredited investor. I don't know what to do with it. So I would educate them not only on investing in real estate, but not investing in single family homes. Then I had to educate them on the hospitality world, and then on, the operational piece of it too. So, I mean, it was 100%. They just believed in me as a person, not really the asset or or even the location maybe.
I talk about that. I had a conversation on Friday last week, talking about raising money for deals with somebody I know. And, they're like, well, what are we going to do with the property after we buy it? Are we going to refi it, buy and hold, cash flow? I said, if that's the question that you need to give your investor the answer on before they say yes or no, you're not educating that investor properly, because if they've never invested with you, they're
Right.
investing in you. The project is a standalone. So I had that exact same conversation the other day by basically saying, listen, if you're focused on whether we're going to buy, refi, you're going to call the investor and say, oh, we're going to refinance it. If they say yes, they're probably not the investor because they're not looking at it the right way. So I said, you're going about it the wrong way. They're investing in you and you alone the first time they invest with somebody, and
Yep.
you're not, I don't want to say selling it because it sounds weird. I like to say you're not presenting the right opportunity to the person, or you're not talking to the right people. So that answer resonates with me, because I personally say, listen, people are investing in you. The asset's secondary right now. If you go to the institutional level, yes, it's a little different. But when you're
Sure.
starting off talking to people, friends, family, whoever it may be, they're biting off on you and your personality and your ability to execute, not necessarily the deal 100%.
Absolutely. I mean, absolutely, man. And I think too that one thing I learned through those capital raises was that no matter what the capital raise is, this is one of the things I wanted to talk with you guys about. Is I'm hearing, and I've watched this the last 5 years. It's this educational tidal wave of multifamily syndication, right? I mean, everybody's talking about it, and it's very, the Jobs Act of 2012 obviously made it a lot easier for folks to invest into real estate privately. But one thing that's really kind of, interesting to me is to listen to folks who are raising capital or teaching other people to raise capital. And the first question I ask, because I do have a capital raising coach now, but the first question I ask is, how much capital have you raised in the last 6 months? And the answer I always get, well, we haven't been able to find a deal, or we haven't been able to get anything under contract, or this or that. But everybody wants to give you a tip or a trick or a skill. What you have to have is grit, persistence, discipline, and authenticity and honesty. That's how you raise capital, is just transparency throughout the process. It's not some pitch. It's not some gimmick. It's not some flashy object that gets them across the finish line. In every single one, I've raised about $15 million now for our real estate projects. Every single one is hard. It gets somewhat easier because your bucket gets bigger, but it's hard. And no matter what, whenever you're taking money or somebody's investing money in a project, there's going to be questions. There's going to be hard questions that you have to answer. And many folks just think that, I'll just raise capital for my power base. And I'm like, okay, but just don't underestimate the time that it's going to take unless you're leveraging somebody else's, major experience or capital resources that they have. That's going to make it easier for you. If you're new to this business, trying to get into capital raising, it needs to start today. No matter if you have a deal or not, you have to start today, and it has to be an ongoing process. When I started brokering these commercial and multifamily properties, I was doing 3-4 transactions a month on $2.5 to $10 million on the brokerage side, but I stopped capital raising. And then boom, I had an awesome property, put it under contract, and I'm like, oh, I'll just go back to my list. Guess what? They already invested with somebody else, or they had lost interest in me because I wasn't nurturing those relationships. And so I don't want folks to say that, or hear the sentiment out there that there's just all of this money that's willing to be put into real estate, because it's difficult, it's hard, and it takes a lot of time and skill on your part.
Yeah. I think it's really important you said that, because one of the things I was going to bring up that I think some people may have misheard in your story was you put those deals under contract. You were able to raise $2.5 million in 45 days, which sounds great, But the key part was you had spent so much time putting yourself in a position of authority and knowledge and an expert in certain areas that, yes, wasn't exactly operating a bed and breakfast, wasn't exactly raising capital for a commercial property, but you would put yourself out there as a person of authority in some sort of real estate
Yep.
in Kansas City market. All that work translated to being able to do it in 45 days. It wasn't you put something under contract. You'd never spoken to anybody in your life. You'd never told anybody you were doing real estate. You'd never done anything in real estate. And, boom, 45 days later, even if you worked, 80 hours a week during those 45 days, it was all that work prior to that helped you out to it. So I'm really happy you continued on, but I wanted to bring it back to that front story for anybody that got confused. It wasn't just 45 days. It was so much more before that brought it to.
And that's a great point that you pulled out, because it was 45 days after I had already had 30 days, right? So I negotiated a 45-day extension. So I failed for the first 30 days.
Mm-hmm.
I failed those first 30 days, got a plan, got strategic, thought about the objections, how I could solve for them. And then it took another 45 days. So it was a little bit longer. And I learned my lesson on those first 30 days, really, really quickly.
So I think that, it's nice when you hear that, because, I tell 100 people this a day and none of them ever plan it out or go on execute. I mean, Chris has heard me say it 1,000 times, you're not raising money when you find a deal. You're raising money. The two things in this business, if you focus on deals, that's great. If you focus on money, that's great. You're a powerhouse when you can do both at the same time, because you have to time block your day to find deals. And then also investor calls, investor meetings, lunches, dinners, coffees, breakfast. I tell people all the time, as you said, you have to start today for whatever. You can't wait till you find a deal, because you're too late, and you're going to have to negotiate an extension or bring in a partner or something. But, it's nice. I'm going to clip out that last, 2-3 minutes or whatever it was. And when someone says, how do I raise money? I'm going to say, here you go. Take a listen to this so I can save myself 3 minutes of conversation, because I tell that to 100 people, and almost to almost 100% of the time, I get a call back in 60 days. It's like, well, this is, I can't, I didn't do it. It's like, well, there you go. Right. If anyone's listening to this podcast, when it comes out, raise money now, right? Call 10 people at the end of this podcast and say, hey, I'm a real estate investor. But, do you have any interest in that? Right. But nobody does that, right? Everyone waits. And next thing you know, like you said, your 30 days goes really quick when you have a contract out, and people don't realize how fast it goes. So I feel like someone's finally listened to me, over all these years. So it's nice to hear. Yeah.
And I think I'll add a big failure that I've recently had, and being a proud guy, it's not easy to say, that you've got a big failure. And one thing, I had raised about $7 million in real estate, and I had this opportunity brought to me, and I said, oh yeah, I can do that, because I had, again, this ego that unfortunately was everything that Logan Freeman touched turned to gold. I had the Midas touch, right? And it had nothing to do with what I was doing. It had everything to do with the market, the work I was putting in might have helped, but it was my team, all of these things. I had this opportunity that was outside of my scope, 100%, right? It was a self-storage deal that was in an opportunity zone in Michigan. So therein lies, my three problems that I had: no self-storage experience, not in a market that I knew, and it was in an opportunity zone. This was at the end of last year, before the last tranche of regulations came out, solidifying the opportunity zone projects. And we lost over $150,000 on that deal, trying to extend it out and getting the capital raise done. And what I learned through that process was that you have to have a story for a property. Every story or every property has a narrative, and you need a good narrative, but it cannot be too novel. It can't be too different, too unique. It will get the meeting, but you will not close that investor. You have to be able to bring a property to somebody, tell the narrative, and then have one component that's interesting and unique. And so what I learned on that is, don't get outside of your scope unless you're teaming up with somebody who's done it 15 times before, right? And so I learned a big lesson right before Christmas is also, during Thanksgiving and Christmas, it's also difficult to raise capital because people are spending time with their family. They're winding down for the year. They're not looking at investments maybe as much as they were earlier on in the year. And so for me, it was a real gut check. It reminded me of that same time I had that big ego when I went out to Oakland and I was like, I'm going to beat all these guys' asses. And I got my ass handed to me. Not 100%. I made it for a couple months, so I was good. But I didn't make the team, so it didn't matter. But I had a really gut check to say, okay, what did you learn? Well, one, that hurt because that was real dollars that we lost on a deal. Two, make sure that your competence is at a place where you can talk to it. And three, don't make the story too novel and don't get a big head. So, from a guy who, again, had a lot of success in that year, I said I can do anything. I learned really quickly that I didn't. And we shifted back to what I'll call the market, what the market was asking for us. And the deals may not have even been as good, but it was what people were comfortable with. And we've had major success after that. So I think that's a big, big point to illustrate is don't get out of your comfort zone unless you have somebody who's done it before.
Yeah, I like that because right now, with everything going on in the world, we're trying to tweak that perfect deal. And we've used this time to internally look at some things. It's okay. We do this really well. We don't do that really well. How can we be the best at what we do? And if so frequently, it's like, oh, I got this hotel deal. Oh, I got this development deal. And I tell people, listen, what do you want me to, you want me to offer on the deal I know nothing about? There's no way I'm going to be competitive because I have to take into consideration everything I don't know. And people don't, you got to be an expert in what you do or pretty close to that. And you can do really well. And I don't know who said it. I believe it might've been, it's the Apple philosophy of you don't have to dominate 100% of the market. You have to dominate a small percentage of the market and be the best at that. If you do that, people are going to look to you. It's like being an expert, just like, when you went through the Bigger Pocket forums and stuff, right? Kansas City expert, let me call Logan, right? He's the guy that,
right.
And whether I want to invest or not, it's you're playing off the expertise of whoever the operator is. And if you do something unique or different and you do it really well, you're going to get paid for that.
Yeah.
If you try and do something you don't do well, it's going to cost you. And it's happened to us as well. We've done stuff that we should not have done and we're paying for it now, but, understanding that is important and knowing that, wow, we're not going to make that mistake again. That's the part where, it's going to separate people from making the same mistake over and over.
Yeah. I think I just want to jump in real quick. It's, staying in your lane and kind of what we're talking about. It's so important because anybody that we have on here or that is listening to this podcast is probably not becoming BlackRock in the next couple of years. So there's so much, the great thing about real estate and the great thing about this community a lot is it's such an abundance mindset. There are millions, if not billions of dollars of real estate in the Kansas City market. Yep. You could spend the next 20 years just in Kansas City. That's right. And have a tremendous amount of business. And that's where I think part of where I get frustrated too of people saying, oh, I'm going to go out of state or I'm going to look in, all across the country. It sounds sexy, but the most, successful and growth companies are ones that just stay honed in on what they do and where they do it. And they don't go outside of that. That's basically what Warren Buffett says he does. He continually relates it back to batting in baseball and saying there was someone who broke down, the batter's box. And he basically said, he broke it down into, I think, like a 7x7 grid or something like that, or a 7x10 grid. And he had all these different dots and every dot had a different batting percentage. And he said, as long as I stay in, the boxes that I bat a 400, I'm going to have a very successful career. But as soon as I start swinging in those pitches in the outer bottom corner, or whatever the terminology is, John's probably laughing, I'm going to bat 250 or whatever it is. So it's finding out what your niche is or what your lane is and sticking with it and understanding that, yes, the first 6 months, 12 months, 18 months, 24 months is going to be much slower and more painstaking than the following 12, 24, 36 months as you kind of build up that growth, that momentum and, that expertise in that area.
Yeah. I mean, I couldn't agree more. I mean, I also learned a pretty hard lesson just recently. I bought this property with an investor. It was a joint venture deal, and it was a great location. But the building was built in 1890, and it
Wow.
was completely vacant, meaning there was nothing going on in that building for a while, except for this little old 85-year-old lady who was smoking a cigarette in there, saying that she had a business for 20 some years. And she did, but there had not been operational for quite some time. I bought that property with that investor, and just last week, Monday, sold my shares back to him. And I legitimately cried. My wife, and I have not cried for a long time. I learned that if you try to do everything, you're going to be really bad at anything. And so I tried to do everything on that deal. I tried to be a general contractor. I tried to be a leasing agent. I tried to be a developer. I tried to be an interior designer, and I ran myself rampant. And I finally just had to break down and just call the investor. I said, look, I'm having a hard time getting a hold of you, making decisions. I don't have control. I don't think I'm doing the due diligence, or sorry, the work for you that you need. It's not working. And I had to admit defeat once again. And I think that brought me back down to say again that you have to stay humble. But I look at that and I say, okay, well, no wonder I failed. I had zero experience doing that. And I learned some really costly lessons. I mean, that building's carrying costs every month is $8,000. That hurts, and it hurts because I knew that it could be a hero, but it went to zero really quickly because of my overconfidence and ego again. So I think that and now I know, and I also placed a bunch of dollars in other people's deals. And I was like, oh, this is going to be a great business for me, being a co-GP and doing all this. And when I did that, I felt so, I'm not going to say sleazy, but I felt used because I did all this work. I believed in the project. And then it's just like, after it closes, it's done. It's gone. And I had zero gratification from placing dollars in somebody else's property and somebody else's project. So I know exactly what I'm focused in on now. We have a recipe for success. I kind of mapped out the different, what I'll call roles and what I'm really good at. I stay in my sweet spot, and I partnered up with two guys that are incredible developers, incredible on the financing side. And I'm incredible on doing what I do, finding projects and finding people to do those projects. And so now that I'm staying in that sweet spot, real estate and the world is my playground, because I don't have to worry about all this anxiety, stress, turmoil that's going on inside of me. I can sleep at night because I'm doing what I'm supposed to be doing in the process. And so I think it's really, really important to note that you can't do everything at scale, right? You can go do one project a year if you want by yourself. That's fine, but that's not my goal. And so that was another really hard lesson that I learned early on in my career, that you're not an expert at everything and you can't do it all, because my other businesses suffered while I was trying to do that as well.
Yeah, no, that's important to, echo, because I think people get, if you want to buy one or two deals a year, you can do everything. There's no doubt about it. But if you find out what you do well and you partner with the people that do what you don't do well and can take the stress off your plate, that's a marriage, that's going to work, right? Even if you complement, if someone's doing exactly what you're doing and nobody's doing one part or the other, those don't typically work out. So you're 100% right. You know what you do well, do it well. Let the team do what they do well. And I say it all the time. There's a level of trust in real estate that you're going to have to give up, because unless you're buying one project a year and it's the same thing, it's different. But if you're going to be capital raising, finding deals, or asset managing, or whatever it is, someone else is going to be doing that role on a day in and day out basis. And you can't think you're smarter or know everybody or know everything, because you're going to have to let somebody trust it. And people don't, everyone always says, I'm a type A personality. Well, you're going to get over it quickly.
Yeah. We had a great opportunity to partner with a gentleman that has been extremely successful in Kansas City. And, after doing kind of what I'll call a values alignment and assessment, thankfully I've read enough books and put myself through enough all kind of self-awareness so that person, even if they became a part of our company, would want control in every single part. And I just had a frank conversation. He's a great friend of mine, I'm selling a 40-unit apartment complex for him right now. But I said, look, you cannot relinquish control. And that is okay, but it's not okay with what we are trying to accomplish. And so it's really, really important. And I think that he started to have realizations that if he wants to get to the next level, he's going to have to build something beneath him, not necessarily partner with somebody else. So, I think it's important to be self-aware and understand who you are as a person too.
Yep.
Yeah, it's so important. I think you see a lot of people in media that that are involved in many different things. They always have partners, or they have operational partners, or people that have the experience.
Absolutely.
Shows like Shark Tank and The Profit are the perfect example. They're not buying companies to run them themselves. They're investing in already existing or struggling companies that have some operations in place already. And oftentimes what they're doing, especially with the struggling ones, is they're buying a piece of the company and then they're bringing more resources into it to lift it up to where it can be. Because oftentimes, to your point, it is somebody trying to do too many things. They're the designer, the operator, the financer, the accountant. They're trying to run every single thing and grow it to multi-million-dollar business. It doesn't work that way.
Right.
And they're able to see that because they're invested in so many businesses, which is basically what real estate can be, especially at the commercial level. And they've got these operating partners in place to run it for them. And their expertise is in different things, whether that's pulling in other companies to help them with deals, or they have a connection to this, or they have a connection to that, or they can make an introduction to Walmart or Whole Foods. And that's where what they can do. And to your point, it's so apparent. How many times do you watch a show like Shark Tank and somebody drops out because it's not what they do, right? If it's a product that's going to be sold online or on QVC, you rarely see someone like Mark Cuban doing it. You see
That's right.
one of the other ones doing it, and vice versa. So I think it's so important to understand what you're good at and what you can bring to the table, and if it's a right fit for you. And to your credit, it's the same thing of, some partners can be great, but they may not be great for you.
That's right.
That you had someone who just wants more control, and it's just not someone that's going to work well for you. So I just think it's so important, not only finding partners, but finding the right partners.
Yeah. And I speak to that on the brokerage side of things, as well as whenever we're talking to a limited partner in a project. I mean, we really try to make sure that, hey, if you want to be active in a deal, then investing in ours is not what is for you. I mean, this is legitimately the way that you get passive income. If you want to go buy a deal, but I can't have you wanting to be actively involved in our deal, but being a passive investor. And so we drop off a lot of investors that way because they want to be more active. They want to kind of, be, in the GP or something of that nature. There's a time and a place for that, I think, for every operator, but not in every single deal. And so we have a values alignment, kind of assessment that we try to go through with our LPs. And it's really just me spending a lot of time getting to know the person, not only financially and professionally, but personally in their own lives. And so I think it's really important to think through when you're looking at it, from an LP standpoint and a GP to know your role and to stay in there, because it can get messy really, really quickly if it doesn't.
Yeah, for sure. I think what would be a good transition, and I think people would get a lot of value from, is on the capital raising side, maybe, best practices or kind of what your flow looks like, what the conversations look like. How do you do it? What have you found that works really well? How do you educate people? And then also, how do you keep a lead warm when you don't have a deal?
Absolutely. So, I think about this from a funnel standpoint, right? I mean, it's just goes back to sales and marketing and what I'm focusing on. And I had to figure out, I read a great book, love him or hate him, Richard C. Wilson, that runs the Family Office Club. He has some great content. He's got a book out there that says, you really need to identify who your investor avatar is. And, my background has to do with some tech and some startups. So I was, running a startup company here in Kansas City for a couple of years, so I can kind of speak that tech world. And I started to kind of infiltrate what I'll call the Silicon Valley guys. And the way that I did this was, I found a few of these investors that actually reached out to me from hearing me on a podcast, and we started building a relationship together. But they were telling of their companies they had these real estate investing clubs. And I said, well, that's interesting. What do you guys do? They said, well, we bring in guest speakers and we do education and we go through deals and all this stuff. And I said, well, that's really, really cool. Why don't I just jump on and give you 5 best practices on how to invest out of state, since you guys live in California and you're trying to invest in the Midwest? They said, that'd be great. And so that was an interesting kind of opportunity for me. I did that at Apple. I guess they liked it because they had me come out and speak in Cupertino at their campus before COVID this year, which was really cool. But I was able to get some introductions. I have some other investors at Amazon and eBay and Intel and Facebook and Google. And I did the same thing at all of these clubs. And I became a trusted resource because all I was doing was trying to educate and add value. And at the end of the day, a lot of those folks ended up being investors. So that's all to say that I took what I read out of that book, understanding who my investor avatar was, and then I started trying to get my message in front of those folks. So LinkedIn is an absolute goldmine, in my opinion, because of the users that are on LinkedIn and the way that you can kind of collaborate with folks. So I use LinkedIn, probably post 3 to 4 times a day, try to post good content, engage with folks. And then the podcast circuit has helped quite a bit, talking with other individuals, sharing my story, all of that. Bigger Pockets has been a great kind of pipeline for me as well. And then, I don't do much on advertising and or Facebook or Instagram. I do know that people have success with that, but my avatar really was just to get out in that tech world. And I realized a lot of these tech guys also have podcasts. So I created my own podcast to start having these tech guys on my show and explaining to other folks how they were investing out of state effectively. And I use that podcast as a medium to then be seen as, hey, this pipeline between California and in Kansas City specifically. And it just found this great little gold mine. Now I've got, relationships at every single one of those companies. Those guys do co-GPs with us. They bring capital to deals, and they turn into a lot of brokerage clients as well. So for me, it was finding that avatar, what sandbox are they playing in, go play in that sandbox, and just it was a waiting game. It was patience. I didn't ask for anything. I think that Gary Vee says, jab, 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 right hook, right? And so finally the day came where I right hooked, and everybody was like, well, I was just waiting for you to bring a project. We've been following you for 8 months. So that was really cool opportunity for me to see that the work that I had been doing, staying consistent on social media, adding value on my newsletter, doing all of those things is a way that I was keeping these relationships warm. And when we put out a deal, our last project, we put it out and 5 or 6 guys came into the deal I had never spoken to. And it was a 506C, so it was okay that way. But when I talked to them, I said, hey, where did you find me and how did you follow me? They said, well, we heard you on a podcast 6 or 8 months ago. Then we got on LinkedIn and started following your content every day. We're just waiting for you to come out with the deal. And so I think that showing up on social media like you guys do on a regular basis, adding value and making sure that you're staying consistent is a great way to kind of stay in front of those folks.
100%. I think you broke it down really, really well. From a 30,000, maybe down even to a 10,000 foot view. So I love that. I think, with the rise of technology and stuff, it's significantly easier and can be less targeted to kind of stay on somebody's radar. Cause I think that's a big part of the game. It's just being like, hey, I'm here. Remember me. I'm still around, still doing things, but you're not necessarily picking up the phone or sending them an email and saying, hey, Mr. Bob Jones, just want to touch base with you because I'm doing X, Y, and Z. We're trying to find deals. And that can be not only cumbersome, but from the receivership side, it could feel a little bit of like, like this is very salesy type thing.
Sure.
So, I think you want to do both, but I think, in the past when you didn't have that stuff, it was not as easy, or it was just done through email newsletters, physical newsletters, things like that.
Yeah.
Are you doing anything besides the LinkedIn? Because I know you do that very well and you're very consistent. Do you have anything that you think you're doing a little bit different than other people?
Yeah.
I know you gave a few, but I'm curious if there's anything else or anything creative or any thoughts you have of things you're going to try that you think might be a little bit different than what some other people are doing.
Absolutely. And so one thing I want to also note is I'm in an area as a broker, I get, don't tell my brokerage clients this. Actually, they know this. Kansas City. I have other brokers sending me deals. I'm in front of property owners. I'm at ULI. I'm at CCIM. And so that's a big piece for me because my deal flow is very, very kind of what I'll say fluid. I mean, we probably have 4 projects going on right now, and every single month we've got 2 to 3 kind of working. And so deal flow has helped obviously staying in front of these investors. But I also want to point out, Chris, that my schedule, if you check my weekly recap posts, I have on average 30 to 60 phone call meetings or Zoom meetings with people a week. That is a ton on top of brokerage. And that's all passive investor stuff. On top of brokerage, on top of running, I call my family a little bit of a small business, but running my family and running all of that stuff. So it is a absolute grind. And I know that I'm applying this work ethic that not a lot of other people are willing to do. And so from 8 o'clock until basically 6, I have my Apple AirPods in. I have to have a couple pairs because I have to charge them up throughout the day because I'm on the phone that much. So that's a big piece. But the second piece, I heard you mention the salesy piece. So I'll keep this short because I know we're running up on time. But what I did at those companies is I enlisted, so to speak, what I'll call heroes at those companies. So Logan Freeman and FTW Investments and LiveFree Investments, my companies, were not the heroes. Who was the hero? It was the person running that group. I made them look like a superstar. And then all of their friends and all of their family and all the folks they associate with were investing with that one person who was then coming into our projects. There was absolutely no sales because they were already having those conversations with those folks. They had the trust, they had the relationship. It was so important that, yes, they need to talk with Logan and his team at the end of the day to close the deal, but the level of trust was already so high when that relationship came to me that the deal was already closed. I just needed to close up some loose ends. So I think what I'm doing that not a lot of other folks are doing is playing in a very specific space, right? Software engineers, product managers at these tech companies. And I have attorney clients as well that are doing the same thing. I said, look, you have a thought leadership platform built in because of your W-2. Use that, become the absolute expert for attorneys, and then go find more attorneys that want to come into your deals. And so I've done that with attorneys. I've done that with dentists. I've done that with anesthesiologists. I've done that with just regular physicians and helped them create kind of their own following, because that's a book that we're reading right now is called Sizing People Up. And one of the concepts out of that book is vesting. And so Logan is vesting in the success of that one point person who then has their own power base. And then that comes back to Kansas City in some way. So I think that's a unique way that I'm raising capital right now that maybe a lot of other people aren't kind of tapping into.
No, that's important for people to hear, because I try and do the same. I try and tell people all the time, if you need me to tie up the loose ends, that's the easy part, right? But you be the expert in your circle, and it's a level you never have to, you never have to get over that hurdle, because I'm not trying to interfere with your relationships. I'm trying to be your backstop for something that you may need tying up, but everyone else already looks at you as the expert. So if you can build that platform for anybody, you come off significantly more genuine, let's call it. Maybe that doesn't sound good, but you're not selling them on anything, right? That person did the work for you. You're just sort of being a backstop, which I think inevitably helps. And you're empowering people, which I think is important when you're making them look like a genius.
Absolutely. Yeah. 100%.
I love it. I think that's a fantastic place to wrap up. Logan, thank you so much for coming on, sharing your experiences, your knowledge, your journey. I know I definitely picked up a couple things. I'm sure anybody listening picked up a ton as well. If anybody wants to get in touch with you, follow you, connect with you, learn more about you and your company, where can they do all that great stuff?
I appreciate that. So you can find me on LinkedIn. I'm super active there. Just my name, Logan Freeman. But my website's LiveFreeInvestments.com. That goes directly to me. I appreciate it, guys.
We'll drop both of those in the show notes below. Guys, thank you so much for listening to this episode of the podcast. If you're not already subscribed, it would mean the world to John and I if you would do so. And if you are, please send it to a friend, family member, colleague, or acquaintance you think would love it as well. We've also just launched a Facebook group where we're trying to connect with all of our listeners, grow together, work together. and help each other out. You can find that by going to Facebook and searching the Real Estate Investing Experience, or I believe the URL is facebook.com/groups/the REI experience. Logan, once again, thank you so much for coming on. I learned a ton. I think everybody else did. Can't thank you enough.
Thank you, guys. It was a pleasure.
Thank you.